Ooh, what a relief. Figuring out how to get into these things always worries me a little bit. Are you in New York, Amanda?
I usually live in the city, but I live in the Hamptons now for the year.
Oh, good job.
Yeah, it's been good up until now. Now I'm like, okay, where are we going?
Yeah,
It's
I know.
getting cold and depressing. So, are you in New York?
Yeah, I'm in Manhattan.
Yeah. I mean, I go in like one day a week.
Just stay plugged into the.
Well, I've got that. My office is there. It's we have some studios open there, not legally, but they're open. So.
It's hard to know what to do. You know,
Yeah.
I mean,
Where do you live?
Harlem. Yeah.
Is it super rainy today?
It's just cloudy.
Yeah. Crazy here.
Oh, really?
Yeah.
Where are your studios that are open?
We have one in Flatiron, one on East 87th, one on East 67th. So we have one in Soho. And I think one of our Brooklyn ones is open right now too.
Cool.
But very like modified. Only a few people in every class, and we have to call them something else. And even though we're calling them something else, they're probably not allowed to be that.
I don't know if this will be the panel for it, but I'm just hearing the story of how you've handled, I mean, both the business side, but also just the emotional side, I would imagine has been quite a journey.
Oh, it's been brutal. And you hear people, they're like, yeah, that's what leadership is. I'm like, oh, not for the last 8 years. This hasn't been what leadership is.
Like, that's a really nice word for it, but it's like how to get, beat up and just hang in there or something.
Your business must be like blowing up.
We're doing okay. Yeah.
I wasn't sure how to get on this. I think we're good now.
But I don't know if people
reaction where I was like, thank God I made it.
I did one other event similar, but I wasn't on the panel like watching, and then I've done these on other apps basically. So I didn't realize I had to like re-allow certain things.
Yeah, I didn't either. Okay, good. You can now see me because I've actually never I've heard about Hopin, but I've never actually used it. So this is
Yeah, I know folks who were looking at it as an investment earlier. So I had heard about it for sure. And then I don't know if Google had ended up, and I think that's why, because people were asking Google if they were using it and like what they, for the larger events, right? That go beyond just a meet.
Are we going to be able to see people or just each other?
I think just each other.
Okay.
And I noticed this is recording just so everyone's aware, and folks are joining the session now, it looks like.
Hi, everyone. I'm from the HackDo team. We're super excited to be here today.
Oh, great. Thank you.
A little bit of the logistics. Yeah, it's a little bit weird. Like you can be able to see people's faces, but they'll be interacting through the chat. So hopefully that's okay.
Okay. And what was your name?
My name's Akshara, and this is my co-director, Michelle, with me.
Oh, great.
Hi, nice to meet you guys.
Hi there.
Thank you all so much for being here.
Thank you.
Thanks for having us.
I'm just waiting for Greg to join. We were just chatting with him. I don't know if he's encountering any issues. Is there someone HackDo tribe that could maybe help Greg if he has an issue?
Yeah, that's what we're here for. If he has an issue, he can reach out.
Oh, there he is. Okay.
Jen, I don't know if others are experiencing this, but your audio is, I don't know if it's like a different input than it was on our last call, but it's just like a little muffled.
Is it?
It's survivable. I just thought I would mention it.
How is this now?
Maybe a little better.
I wonder if I should actually unmute.
How's my audio?
I can hear it. You fine?
Yep.
Right. Hey, everybody.
Glad you made it.
Now you're on mute, Jen, or we can't hear you.
We can't hear you, Jen. She's on mute.
Everyone who's joining, thanks so much for coming. We will start shortly. I think we're having some microphone issues, but all good, no worries.
Are you still, is it still unmuted? Oh.
I wonder if you leave and come back, if it will just at least reset so we can pick you up on some like.
Right. Can you hear me now?
Yes.
Yes.
Sorry, I don't know what happened there. Is it okay?
Yes.
Sorry for the delay. I'm Jennifer Byrne, and I am the co-founder and CEO of Quesnay, Duke class of '93, and delighted to join this today in the Hack Tuesday and share my background and experience along with my esteemed Duke alumni panelists. We'd like to invite you to ask questions and make this a really interactive session. So basically, to kick us off, let's go around the table with introductions. And Kerry, if you want to kick us off.
Sure, happy to do so. I am also Duke class of '93 with Jenn Byrne, who was one of my friends back then. And then I went to HBS, graduated there in '99. I spent most of my career for the last however many years that actually is, in early stage startups, mostly first in the tech space, but now look a lot at healthcare. I was actually a biology major in undergrad, so it's been kind of fun for that to circle back around. So healthcare and the environment is sort of our area of focus now. So my current role, I'm a partner in a 2-person seed stage VC fund based in Austin, Texas. We're called TrueWealth Ventures, and we specifically invest in women-led companies that are improving human or environmental health. We're investing at the seed stage, so a lot of times that means our companies are, maybe the size of the team that you're working with this weekend, hacking away. So they can be 2 to 5 people, maybe pre-revenue, pre-product, pretty early. We're looking for things where the science or the technology, we know it works, but it's really about, can they take it to market? So hopefully that perspective will be valuable for you guys today in terms of, that really early stage of just getting started and who's going to be willing to fund you at that stage.
Yeah, and just to add, I didn't even reintroduce the topic, but really what we wanted to cover today is really how to start and scale a business, and then also how to approach investors when you're ready to go raise capital. So you have a really great set of experts on this panel to help guide you through that. Amanda.
I'm Amanda Freeman. I'm class of 97. I always get confused, and after Duke, I became a trend forecaster. I did market research, consulting, and trend forecasting focused on Generation X and millennials. So I studied the generations and then helped companies create products and services that resonated with them. I became obsessed with a trend we wrote about in 2006 called the rise of well consciousness. And this was before wellness was a thing. And it was when it started to become a thing. And so I created a daily email called Vital Juice that delivered the latest in fitness, nutrition, beauty, and wellness to people's inboxes. I also went to Harvard Business School. That was before I started Vital Juice. And while doing Vital Juice, I became interested in boutique fitness, which is, these are fitness studios that focus on one type of workout, and they deliver that workout really well all day long. And I felt that what it was missing was a certain type of result that I was looking for, a long, lean body. And so I created a business called SLT, which stands for Strength and Length and Tone. And I started with just one fitness studio. Prior to March 15th, we had 26 studios opened. We'll see where that nets out when fitness studios are really able to open. I also started a few years ago a business called Stretched, the word stretch with a D and a little asterisk, where we stretch people out. And I started that because while doing SLT, I noticed that everybody left before the stretch happened, even though in theory, you need to be stretching. You don't actually like to self-stretch, but if you watch someone with their personal trainer, they love being stretched out by their personal trainer. And so the idea was, why can't you just show up and be stretched out for 15 minutes or an hour? So that is Stretched, and we have 2 locations. And then I also do angel investing, focused largely on health and wellness or female founded, but I'll pretty much invest in anything that I think is super interesting.
Great. Tracie.
I am Tracie Henson. It's my maiden name. Water. I was Duke class of 04, but I'm also currently Fuqua class of 22. I'm in the Global Executive MBA program, and the bursar and Duke still has my maiden name up there. So you will find me under Henson if you need it. And my picture for women, I was 18 with some short hair. Anyway, it's great. It's great. It's fun being back at Duke. So post-Duke, did consulting, worked in nonprofit. Happy accident, fell into venture capital. I'll tell that story another time when we have more. And so it was at the last 10 years, I was at Google Ventures, or GV, as it is now known. Just wrapped up my time there, focusing on school, family, and whatever comes next. That's TBD and in progress. But at GV, really, one, helped build the fund. We invested in seed companies, including Plaid, which has a Duke founder. So great recent exit of a fintech was really, I remember onboarding them. the day we did funding. So really exciting to bring that Duke connection back. Worked with C companies, but mostly Series A and B as they grew, and helps them connect, similar to what Jenn does, with large scale corporations to really grow the company, grow the business, grow revenues. So I really know what it's like to be in a room with an executive, how executives think about what they're buying and why they're buying it. But then also just working early stage on what's important at building a company, because I helped build GV.
Awesome. Greg?
Hey, everybody. Greg Akinbiyi, graduated in Duke 2009. I started my own company called Solution Finders, and out of this company, we're building products. This first product decidedly really came out a lot of personal frustration, started in the nonprofit space, seeing the organizational dysfunction, then went into consulting, where now I was helping other companies address their dysfunction, and then went out to San Francisco working in a venture-backed company with loads of money, and we had no real direction and a lot of dysfunction there as well, and competing teams. So came back to Durham and said, you know what, let me help companies build products. And in that process, realized that it started with organizations not really knowing what their customers' needs were. So aligning myself with Anthony Olwick's outcome-driven innovation, started to work backwards from there, and said, how then can you help organizations align themselves around what the true needs of their customers are in the market? And so started with the seed of that idea there, and then started pitching it, as I imagine many of you will do. And people said, I need that. And I said, I know. And so started my own company and started to do things that don't scale by doing a lot of the analytics myself, building a lot of the workflows and all of it in Google Sheets to begin. But as we continue to make this transition into software, we're seeing a lot of value, particularly within our first market that we're tackling, which is community development financial institutions. So they fill that gap between mainstream banking and a lot of the underrepresented communities, rural communities that are looking to get financing. So those institutions are incredibly important to those people that they serve, but they're also getting disrupted. So if you're familiar with Clayton Christensen's disruptor and innovation theory, there's a lot of fintechs entering into that space. So for them, harnessing the power of collective intelligence has become incredibly important for them to remain relevant and profitable in their spaces. Also, fun fact, I was the captain of the football team my senior year under David Cutcliffe. That was his first year. And so honored to be back at Duke and reconnecting with the roots.
Very cool. I like that fun fact. We didn't hear that before. Taylor.
That's awesome, Gregory. Hey everyone, I'm Taylor Jacobson. Excited to be here and really hope we can make this valuable for all of you. My company is called Focusmate, but kind of taking a step back, I started working remotely about 10 years ago, and I found it incredibly difficult. And maybe some of y'all have had similar experiences this year where you've basically working alone, working from home. There's no accountability, there's no structure. It can be very lonely. And so I started a company to help solve that problem. And very simply what we do is we pair up two users for a 50-minute video call where you keep each other company and you hold each other accountable while you each do your own work. And we have found that to be magically effective at helping you be intentional and just follow through on whatever it is you want to do. And though it's Saturday, I've done three hours on Focusmate so far to meditate and do yoga and do some journaling and just, make sure that I've made good use of my free time today. So like Tracie, I actually started in consulting and then nonprofit, actually in India, some fun entrepreneurial stories from there. But yeah, I'll leave it there and I'll pass it back to you, Jenn.
Thanks so much. And yeah, just to round out the group here, my quick background, I mentioned I co-founded my company with the purpose of bridging the gap between corporates and startups. Gets at a little bit of what Greg talked about, a little bit Tracie, your background too, but seeing that big companies are really good at innovating on existing processes and products, and startups that really know how to think outside of the box and stretch innovation a little bit faster, more nimbly. So we run accelerators and innovation competitions to really bridge the corporate startup gap. And a lot of it is communication, expectations, and just culture alignment too. One of the things that love to share with the students is we're working to help more women in tech get access to mentorship, funding, pilots, partnerships by running female founders in fintech, insurtech, which means insurance technology, as well as mobility, which is the new fancy term for automotive and transportation industry. And so those programs run annually globally. Definitely check out our website, quesnay.com, if you're interested in learning more. But we hope to make this session interactive, so feel free to put any questions you have in the chat box. But maybe to kind of kick it off, Greg, I guess you want to kick us off with maybe what really was the tipping point for you to go from idea to taking the plunge into launching your own company, and any advice you might have to any of the students thinking about starting their own companies.
Yeah, thanks, Jen. So a little bit more background. Both of my parents immigrated to America from Nigeria. And so they were necessity-driven entrepreneurs. My mom started her own daycare in downtown Miami. My dad started his own construction company. And I saw the challenges up front and personal as to what life of an entrepreneur is like. So I never had a glamorous image of being on the cover of Forbes or Fortune magazine and one day my name, being a household name. But I just said, man, that's a lot of work to run your own company, have employees. And they've still done that work till today. And fortunately enough, they've been able to grow those companies and be sustainable and own a lot of other things in Miami. But when it came time for me to make the plunge, I had an aversion to the glamour, but realized that I really needed to focus in on, is this a real need? And not just a need that I saw or frustration that I had, but in talking with people and stumbling into it, I realized that there was a real opportunity that could be really captured in the market. And so I saw just through conversations and customer discovery in those early stages that, okay, this is something that I could essentially hack my way to sustaining myself. And so been able to do that, selling into associations and into other organizations, but really have begun to focus on the target market. And so that really gave me the confidence that, I can continue down this path and in this journey. Yeah, that's a little bit of my story.
Anyone else want to chime in? Taylor, anyone? Amanda? How'd you go from—
Will you repeat the question?
How did you go from, I think I want to solve this problem, or I think I have an idea, to, yeah, I want to form a company and I want to go do this? Like, how did you, what was the thought process? What made you, I guess, have the confidence to go do it?
Sure. Well, I would say I start companies when I've had the idea and I don't stop thinking about the idea for a very long time. So if I've had the idea and still think it's a good idea a year later or 6 months later, that's when I know I'm serious about it. And I think I take that and have to add to it the fact that it has a business model, that it has a model that can actually make money. I've started a business before that was called the Experience Club. That was a great idea, but did not have a business model. There really was no good way to make money. And that idea was started as a club where my girlfriends and I were saying that all we do is go out to dinner. And this was when we were in our 20s. Every night you're making a reservation and going out with someone. Why don't we, instead of having dinner, go learn an experience, have an experience, learn an activity, something way more interesting than just having dinner. And we had so many people want to join this club that we were like, oh, let's start this as a business. And the mistake there was you really can't make money arranging these activities. You make like $10 an activity and it's not scalable. So I think you have to take the passion and the desire that, like, you cannot go to bed or without starting that business, or you'd be so pissed if someone else started that business. and then marry with it the fact that it actually has a way to make money.
So true. I like the 6-month idea, because I do run into a lot of entrepreneurs. I have this great idea, but then they move on to the next one and the next one. So I like that idea of, if it really is, still top of mind, 6 months, 12 months, then it's something to go for. That's a really good point.
Yeah, I want to build on what Amanda said, in terms of, you sort of hinted at some level of like just not being able to drop it. And Sam dropped in a question here about, what got you into the startup field to begin with. And I was like, oh, that, in a way, that language almost seems backwards to me, because I think, like Amanda, it sort of, for me, was like, I think I'd regret it if I just didn't go after this. And so I don't think I ever set out to be an entrepreneur. It was more just like I was too impatient trying to get things done some other way. And I was too excited about the possibility of building, having some idea and pursuing it, that I just felt like I would regret it if I didn't do it. And I think, I have also had an idea that didn't have a business model. I've thrown a lot of stuff at the wall. And I think that at some point, what really came out of it for me was just the idea that like a business is basically just somebody out there has a really painful problem that you know how to solve really well. And if you can just find one person like that and just like do that, solve it really well, get them to pay you for it. I mean, there's so much detail to it, but I think that for me, it was over time having a number of things that weren't that, until I eventually sort of got one where I was like, oh, this is a huge painful problem. And I know that because I have this problem, and I'm also really confident that this can solve that problem. And I'm probably not the only person like this. There might be 10 or 100 or, maybe even 10 million people out there who can solve this problem for.
And maybe Taylor or actually Tracie, Kerry, any one of you, one of the questions we have here, what are the practical first steps in turning idea into business? Like maybe what are like the top 5 things that you would communicate? Michael from the student body was asking that question. So what are the practical from idea to business?
Yeah, I guess maybe, and just I can sort of flow out of what Taylor was saying a little bit too, is figuring out what kind of business it's going to be. So I think there can be a business when you have the 1 or the 10 or the 100 people, but that's a very different business than if you want to be a venture scalable business, which might need to be millions of people. And I think sometimes people hear startup and they think that they need venture capital, right? And that isn't the case, right? So you have to decide what kind of business you want to be. And you might build a great business that actually is, the customers pay for it and you fund it and it becomes big enough and you employ people and you create value, et cetera. You don't always go raise money. And I think one of the first things people think is, well, I'm going to start a business, I should raise money. And then they also think raising money means raising money from venture capital. And so I would say stop and assess the opportunity first, and think about what you want out of it. Remember that if you raise money from outside investors, depending on the structure, but in most structures, you actually have to get rid of your business. You need to sell it within in most cases within a 10-year window in order to please the investors who are actually looking for a relatively short-term investment return. There's other models of how you can get funded, but really stopping and thinking, what do I want out of this? Who do I want to be, et cetera, I think is probably step 1. And with the people that you're going to maybe start the business with. So we may address this later, but you need to find people that are aligned around what your goals are, both, how much risk can you tolerate? How long do you want to do this? How much of your time and money can you put in, et cetera. But the other thing I want to mention, just because I teach a class for the National Science Foundation called iCore, and it's predicated off of Steve Blank's early work around customer discovery. But that so often you have an idea that comes out of your own pain, and that can be really powerful because you actually know it and own it and get it and know why it's so powerful. But in order to make sure you have a business, you need to have a market, not just like a single customer, and really understanding what's driving them, I think is really important. And that means talking to hundreds of customers, and using the word customer broadly, like, potential partners, potential ecosystem players, channel partners, et cetera, to really understand where within the market is really your beachhead market maybe, and like how big can you get over time. And I just want to differentiate between getting feedback on your idea and customer discovery, which can be understanding the market and who's out there and what drives them. Feedback can often, first of all, it's really hard not to have confirmation bias and to hear what you want to hear, or to ask questions that are leading questions that make you hear that people love what you've got. But that's, I think, a really important step. And there's some great tools and programs that can help early stage founders make sure that they're actually doing unbiased customer discovery, to make sure that there is a first customer need, and that you've got product market fit or problem solution fit, but then figuring out the bigger picture things around, what Amanda was saying, like, do you have a business model that works? Can you actually make more money coming in than it's cost you to deliver this product? And I think taking a class or you doing a program that makes you kind of really, in a structured way, go through that process, I think, can be really valuable. Keeping an open mind to make sure that you're actually looking for the things that are telling you, no, this is not the one, right? Because I think you can be really excited about your thing and be really stuck on it, and you want to make sure you're open to hearing, oh, this isn't going to make it.
And just to follow up, how would you advise someone with an idea, like how would they structure, well, do I go for venture capital or do I not? Any suggestions how to think about that?
Well, I do, but I feel like maybe this is a good one for Tracie to jump into, because she spent a lot of time in the early space. So I don't know if, Tracie, you want to answer that, and then
I'll let you get into specifics, because I've done a little bit of research on it, but no more. I'd say from the founder experience, the thing you need to remember is every time you're raising funding, you're also giving away a piece of your company. So you really need to think about that. And per what Kerry said, not all businesses are venture scale businesses, and that is something I find that most founders are missing in understanding, right? So that's something very early to going back to who your co-founders are, what risks you're willing to take, your skills, what skills do you need to have to be a successful team? What is the product you're building? What do you need for that? What gaps do you need to fill? So those are all things I would be thinking about. And then funding comes from a lot of different places. And the thing about, and something Kerry was just talking about too, is there's a lot of no's everywhere. And you really need to understand how to utilize that. So all funding is a no until you get the one yes. And customer feedback, your ideas, you really need to listen to them, understand what you truly believe in as an entrepreneur and what you want to be building. But then two, how do you take feedback and constantly adapt and evolve yourself, your product, your team to fit? I would say most companies, Glad being the exception, they were laser focused. Most of the companies I've worked with from early stage, they started with an idea and one thing, and then they found that their core piece of technology really addressed the problem in a different way, or it was actually better suited to something else. And so again, they talk about pivots, but that's what needs to happen. You have to be flexible enough to do that and to really understand your market and your customer to react to that appropriately.
Yeah, I guess, okay, so getting, tactical, we could probably spend an entire hour on the topic of how much money to raise, what kind of money to raise. But you have to think about what's actually required versus nice to have in terms of funding, right? So if you could build your business from customer revenue, you actually wouldn't have to give away any of your company. And it's also the fact, your customers are proving to you that they want it by paying for it, but you might have to grow really slowly, right? Or you might be a business where that's not possible because you literally have to produce a physical good. And in order to produce a physical good, maybe you have to get machine parts, made in order to do that. And you've got to have the money to do the machine parts, right? So there's certain things that are requirements about the nature of your business where you actually need cash. And frankly, one of the hard parts about being a student entrepreneur is businesses that are software oriented, where it could be just, hey, I need Amazon Web Services and some time to code it, et cetera. The expectation is you should be able to fund that yourself. And that's all fine and good if you had a career and you worked for a while and you've got, savings to do that with, but it can be really challenging as a startup. So you probably think all startups need money. And I guess empirically they do. And there's a hurdle that isn't necessarily fair, where the world kind of expects you to figure out how to get to that point by yourself. And so that's where friends and family comes in. And again, that can be, frankly, unfair too, because there are some people who have wealthy friends and family and other people who didn't come from an environment where that's available. And so it is not a fair, equitable world. And so there are more programs being put in place to try to give people a kickstart at that early stage. But there's a lot of, sort of dilemmas there. To the point about whether you want venture or not, though, it really is, do I think this business has to be or could be huge, right? There's some businesses that are successful by the fact that they get huge scale, and that might require a lot of capital to get big fast before someone else does, or just to get the ball rolling. But the likelihood of success is just low, right? And so there's these like lots of flame outs and one or two big successes in any given space. Do you think you can be that company, and do you want the pressure of that? Because as you raise more capital, the hurdle for how you actually have success is actually much higher. So the minute you start raising capital, what could have been an exit to another company for $10 million, which could have been really lucrative to you and your co-founders, is no longer an option. Now you might have to sell for $100 million in order to, have a successful exit and get any capital out of it yourself. Well, holy moly, that's a way bigger undertaking to build your business to where it's valuable, a 10x valuation, and like now Google's got to buy it, or some other big company has to buy it. It can't just be another peer in the marketplace. So you also have to think about like what you're setting yourself up for in terms of what you have to now build in order to have success. But we could talk all day about sort of the nuances of all of that. But those are some of the things you have to start thinking about. And it's not wrong, and it's not an uninteresting business if you don't go that path, right? You could actually build a much more lucrative company that's actually paying yourself and all your employees really well and building value and having a long-term pathway. And just because you didn't raise outside money at a really high valuation doesn't mean your business isn't interesting and valuable. And in fact, it might end up being more valuable to you and your customers and your employees. So don't think that there's just some shiny allure to only VC-backed companies.
And I've seen VCs ruin businesses, that grew way too fast, and then were kind of when it was clear they weren't going to be the home run, they are kind of shut down because only cares about a home run. Whereas I have private equity partners, and they are willing to slog it out and get whatever value out of the business they can. Whereas like a VC board versus a private equity board looks extremely different and not necessarily as friendly to a founder.
You start out without any capital part. I mean, how did you, back to Michael Tian's question, like how did you go from 0 to, 1, so to speak?
Well, to Kerry's point, I self-funded and was fortunate that I was able to self-fund. So my brother and I funded, we both put in basically 50% of the money for the first location. It was extremely frugal, but we were able to put in the money, and I grew one location, funded location 2, funded location 3. So I got to 12 locations, and then I sold a minority stake, a big minority stake in SLT to a private equity company. So I have partners, I have a private equity partner, and then my brother. So there's 3 owners involved in my business. And with Vital Juice, similar thing happened. My partner started it together. We brought in what I would consider a private equity company, not a venture company, and had a similar partnership.
How did you know this was a good idea? Like how did what were the
well, I knew we had gotten to the point where I couldn't grow like I wanted to without a capital infusion. I couldn't.
Actually, how did you know the business idea itself? Even before you kind of got to the point of like, oh, let's grow this bigger. Do you know what I mean?
I mean, the locations were killing it. They were cash flow machines. Anybody outside the industry who looked at them would say, oh my God, you have to open a lot of them. But I mean, I start businesses that I personally want. Like ironically, I don't do market research, even though my background is market research. I'm pretty confident I know what will do well. And, I said, I want a business. I want this business in New York. And I started it. And then location 1 was at like 100% capacity. And so it was like, I need to look for location 2. So the numbers spoke for themselves. And I like businesses that make money. I mean, also the difference in venture. Most of venture businesses don't make money. They grow. They just grow. And, I like businesses that actually generate cash.
Yeah,
Amanda.
Oh, sorry, go ahead. I was going to relay a couple of questions, but go for it.
Oh, no,
Kerry.
I was just saying that's a really good point, and that's something that's, I think, gotten lost within a bubble or, any time where the economy is doing well. And right now you're going to see a reset of funders and founders really thinking back to revenue and, oh my goodness, profits even. So things to be thinking about. And for early stage folks, I just like to add to this, and then let's go to the questions. With a lot of funders who are looking early stage, they're always looking for, have you generated a little bit of revenue? It's not like the giant thing, are you profitable? But like getting your product out there. Some people are so focused on product, they like forgot almost about customers, or they want to build. And there can be usefulness, and there are a lot of paths to go down, but like testing and getting it out there and getting folks paying for something. That's something that I'd say early stage funders are generally looking for, unless you're like pre-seed, then but yeah.
I want to jump in real quick as a founder, recent founder, somebody very early stage. I've chosen the path of revenue first, and going through that customer discovery process that Kerry highlighted. It's hard to not try to influence people's opinions and really getting down to the bare bones of what is their desired outcome and what are they looking for, and where are their needs being satisfied right now, and how can you satisfy that better, building on what Taylor mentioned. But as someone who's choosing the slow growth, build with revenue, that way you own more of the company as you continue to grow. And there's other ways out there, and there's tons of ways to get funded right now. So be creative as well, I would say.
Yeah, I want to actually underscore something Amanda touched on, which was like, you build businesses that you build something that you want. And I think it's easy to get too academic or too rigorous almost in how you think about, even calling it customer discovery, I think can sidetrack you where, Kerry, you talked about doing customer discovery with 100 people. In a way, I think of it a little differently, where it's like, if you can be really honest with yourself, I do think finding 1 or 10 people and really proving like this one person is super excited to pay me money to solve their problem in the way that I solve it. That is, I think, maybe more valuable than, talking to 100 people, and you should do both, right? But I think it can also be really hard to know what is the scale of this thing. You can sort of start dreaming about, well, if 1% of dog owners do this thing, then it's going to be a huge business. But you actually don't know if 10 dog owners really, really, really want what you do. So it doesn't really matter how many dog owners there are. So I don't know. I guess I would offer just a counterpoint that I think it's really important for, especially when you're getting started, to just stay really grounded and like, is this something that you can solve really, really well? And then, at some point, yeah, you do need to think more about those, like, what is the path you want to take? Do you want to sell this business or operate this business and stuff like that? But that's kind of where I would really push y'all to focus when you're getting started.
Yeah, and another piece of advice that I hear often is, especially coming from like a tech founder standpoint, is if you focus too much on product and how great your product is versus benefits, you stay in that trap of just constantly building when you're not out actually providing benefit to the customers. And then, like you said, getting them to pay you to use that product or service and experience the benefit. So wanted just to relay a couple of questions. One is, what skills or I guess sort of coursework or educational elements would you try to incorporate if you were in school right now, thinking about becoming an entrepreneur? Like, what courses, what skills would you try to develop as an undergrad before launching an entrepreneurial career?
I'm happy to chime in here. I think having a very well-rounded exposure is extremely important as a founder, because you wear so many hats. So I think it's important to understand every aspect of the business, whether it's marketing, accounting, negotiations, strategy, every aspect of it is, you have to be a generalist at the beginning. And so I think it's important to have exposure. So it's class-wise, I think it all can help. But I also think in your free time, it's listening to podcasts like How I Built This, and reading inspirational founder and leadership books that inspire you. I also think entrepreneurship is not for everyone. As I get old, I was always an entrepreneur. It was like very obvious from college that I was going to be an entrepreneur. But as I get older, I am way less happy being an entrepreneur. The risk part of it becomes a lot as you get older and have more responsibilities. I have children, I have a house, I have, pressures that I didn't have when I was 20. And so you do have to understand the life that comes along with being a founder is stressful, and you deal with a lot of people, and you have to manage people, and you have to like people. And so if those aren't things that, if you're a risk averse person or you don't handle stress well, like it might not be for you.
I was thinking about this question since I'm back at Fuqua. It's like, what are the things I wish I would have done? And I just finished up the accounting course at Fuqua. It's gnarly, but accounting, psychology, you are dealing with people. You are selling to people. You are selling to investors. You are selling to customers. You are dealing with all of the people in your organization, whether it is just your partner, your multiple co-founders, the people you hire. And so really having an understanding of who you are. Are you an introvert? Are you an extrovert? I'm a moderate introvert, it turns out, right? Like, what do I like doing? How do I need to recharge? How do I need to connect people, understand them, motivate them, coach them, right? Because per Amanda, you are doing all these things, you are wearing all these hats. So I don't know what the course is, but I'm seeing a lot of that come up in terms of behaviors, understanding consumer behavior, buyer behavior, people behavior, and how that can be really important. So that's something I'd encourage you to think about that maybe would be a little bit less obvious than some others. And then design. I've worked really closely with the GV design team. They're pretty big deal in the world of VC, and really piloted that as a center of excellence for VC. But you don't have to be a designer. It's usually not one of your first hires. It's usually something you contract, but really understanding design thinking, which goes into the customer insights and how you're building your product, right? You can be learning all of these things through short courses, through there's so much free stuff published online too,
yeah, absolutely.
As well.
The other thing I would add too is think about maybe that inspiring leader or someone that you admire, and somehow either follow them, read as you all were recommending, but also maybe find a mentor or two that you think could help guide you and be honest with you and provide feedback as to what you're good at, what you're not good at, and then how else, how do you fill those skill gaps, either learning on your own or finding the right co-founders and team members. But having a couple of mentors to guide you is, I think, a really great way to go. It's certainly helped me over the course of my career, so definitely recommend that.
I'll piggyback off of what Jenn and Tracie had mentioned. I would say neuroscience would be really helpful in understanding just how the brain works. I think that influences design, also the way that people feel delighted in products or whatever it is that you're building and providing for them. Lisa Feldman Barrett, in her recent book, The 7.5 Lessons About the Brain, would be a great kind of primer for those who are interested in diving into neuroscience, but really thinking about how the brain works, and the budgeting really helps to connect more deeply, I would say even more intimately, with your customers and what their needs are. And piggybacking off of Jenn, I would say that sometimes people want to become somebody that they're not. So it's really key to understand how you're built, what your skills are, and a mentor or peers and friends. Taylor mentioned about being really honest with yourself. Having people who can be honest with you really helps to really say, okay, this is what I'm really good at, and that's okay. It's not, I need to be like this and I need to have this skill, I need to do this thing, but really knowing and being aware of those other things is going to be helpful, but also knowing and being comfortable in your own skin, what makes you who you are and what makes you great. Your superpowers are going to be awesome.
Yeah, I love what you just said, Greg. And, I would say, I guess, two things. One is I wouldn't think about, what are the specific skills that you need, because maybe for some people there is a linear path to entrepreneurship, and if that's your kind of personality type, great. But I think more often than not, like you just, like Steve Jobs said, the dots only connect looking backwards. And so I would just encourage you to like pursue whatever makes you come alive and become knowledgeable about it, because, you just can't help it. And that will reveal new opportunities that, when you think about building a business for 10 plus years, like you really want to be doing something that makes you come alive. So, wherever you are now, just think about what makes you come alive and kind of go down that path. And I think you can trust that that will add up to something that's really useful in the future. And then the second thing I would suggest is to just start a business. And if you want to go learn something because you hit a roadblock as you were starting your business and you need a solution to that roadblock, because then it will be really applied. You'll be like, oh, this is exactly what I want to try, and you'll go and try it. And so you'll learn a lot faster about business that way.
So as the students are probably learning, you are all incredibly accomplished investors and entrepreneurs, but not everyone is perfect. So one of the questions that came in was, what was the biggest mistake you've made and what did you learn from it, whether as an investor and or entrepreneur? Anyone?
I'll throw out one from when I had a startup. Just because it also sort of ties into Taylor's business, I did a startup on my own. And it's really, really, really hard. And I don't know if you've ever seen the chart, is like what people think success looks like. And it's just this like up and to the right graph. And they're like, what success really looks like. And it's like this squiggly line with like big dips and whatever. I mean, it is just a really, really hard business. And I had obviously people working for me, but I had no one as a sounding board. And, speaking to Tracie's point about like personality types or whatever, I'm definitely an extrovert I think things through out loud, like on a whiteboard, scribbling it in a conversation. I don't like sit in my head and like think through stuff. Well, I didn't have that sounding board kind of person. So I was lonely and my ideas weren't as good because my way of processing ideas, also, I didn't have that other person to do that with. And it was hard. And like, people around me at the time, there weren't the same kind of tools to find other startup founders, et cetera. So didn't get what I was going through, right? Whereas if you find other startup founders to talk to, they understand the highs and the lows and the big wins and the losses and just the emotional turmoil that you go through. And so I think for me, it was clearly a sign that, at least for me as a personality type, needed to do it with someone else. For a lot of different reasons, but for my effectiveness, for my emotional stability, et cetera. And so, having tools or resources or outside parties or whatever, but knowing that that's normal. I mean, Tracie was mentioning knowing it's normal to hear no like a zillion different times, knowing that it's normal for it to really be hard, but don't let yourself get into, sucked into the depression, but figure out how to ask for help, find the right resources, so that you can actually tee yourself up for success. And I think they're going to be different for different people and what they need, but being conscious of that and being open to asking for help. I mean, the good news about the entrepreneurial sector is that there are lots of people around to help each other, but you do need to avail yourself of those things.
I'll add to it. I mean, my business, as we discussed prior, is probably the worst business you could possibly be in during COVID, and I don't exaggerate it because I also have had 12 of my 26 studios in New York City, which you couldn't possibly be in a worse market than New York City right now. And so my biggest mistakes have changed. All of a sudden, prior to COVID, I would have said we didn't grow fast enough. Now I would say we grew too fast. And I would say now, where I am right now, probably the biggest mistake we made is we were very committed to in-person fitness. Our workout is done on a piece of equipment that is 200 pounds and takes up a lot of space, so people don't have it in their home. So the fact that we are only one channel, being omni-channel would have been better. We are doing online workouts now, but it's not as innate and it's a little bit, too little, too late. But I think as an entrepreneur, your mistakes change. You know, if you asked what my biggest mistake was a year ago, it would be very different than what my biggest mistake right now would be, because it's whatever's haunting you at the moment, you know, not what was haunting you 5 years ago.
Yeah, I would say for me, before I began to build decidedly on my own, was I wanted to partner with another entrepreneur. And we had two very different visions and ideas of what scale looked like, of even what markets we should target. And I think there was a part of me that was afraid of really owning my own, like what I knew to be and had validated in the market. So there was some insecurity, there was some fear. And it ended up being a bad partnership for a number of reasons. And so I'm glad that when that ended, it was like a huge contract opened up where it was like, oh, if I would have had this partnership going into this contract, I think I probably would have, you know, not to exaggerate, I would have been stressed out of my mind. It would have been so ridiculous. But so I'm glad in many ways that partnership ended when it did, to position me for the opportunities that were in front of me. So picking the right partners out the gate as best as you can. This person was senior, they were older, they were wiser. And I was like, oh yeah, this would be great. And then it ended up being a disaster. So that was a big mistake.
Yeah, there is, I don't know if you've all heard of this, but it's a worldwide thing. It's called like F-Up nights or whatever, the sessions where founders come together. I won't spell out the bad word that F stands for, but basically it's where entrepreneurs, like in an open mic, just say like, this is the worst thing that I did and here's how I got out of it. Now it's gone virtual, but it's very revealing, and I think it's great because you realize, okay, there are other people that have made the same mistakes and they overcame them, and here's how they handled it. I think in my case, not asking for help and trying to figure out everything yourself is a big mistake. You know, outsource, hire, ask for help. Don't be, you know, ashamed if you don't know the tax regulation in New York versus New Jersey and workforce development. I mean, there are so many things that I tried to learn on my own, which I probably shouldn't have, and I should have just, you know, hired a fractional, you know, HR admin person or a fractional CFO, something like that. So as you said, Kerry, there's so many resources out there, and people love that kind of like, hey, I can make an impact and really help this entrepreneurs. There's lots of folks out there that can be of help as you're trying to focus on your product, and list help to help round out the business and the plan. So I definitely learned the hard way on my end.
I don't know if there is, but yeah, I'll just add one other, you know, well, I think probably my biggest mistakes are yet to come, but a big mistake that I made was just starting the wrong business for me. I had what I think was a really good business idea, and really after only like 6 months, I just like couldn't do it anymore. And I think there was kind of some ego or some glamour that I attached to the idea because I thought it was a cool idea. So I think there's an element of just knowing yourself. You know, Kerry touched on just kind of knowing herself and needing partners in order to sustain her. So there's a lot of just, I think, knowing yourself. But yeah, you know, what is the right business for you? Sort of one of my huge lessons coming out of that experience.
I guess from an investor perspective, any experiences where you say like, wow, I invested in the wrong team, or I chose the wrong timing, or any lessons learned on that?
I'll speak to that. And I didn't write checks at GV. Like I said, I've written my personal ones, but it hasn't been a long enough timeline for them to spectacularly fail yet. But on the investment side, some funds even have their like the things we miss. They're the great deals that came in and you said no to, and they ended up being the one, right? Like one of the big ones. Everyone has that. So again, when an investor says no to you, it doesn't mean your idea is not the winning idea. Like they could be missing out, and every firm has that, right? Like the big ones. So you have a long list that, oh, I wish we would have, we met with them and this is why we said no. And we have those postmortems. So I'd say that's one of the biggest ones. And then two, investor entrepreneur is a relationship. It is a long relationship that you are getting into with these folks, right? They are not just handing you a check and then like going about their merry way. They are joining your boards. They're influencing your company. And on the investment side, it's a we found this founder difficult. We love the idea. The execution's amazing. But then this investor and this founder who clearly didn't quite jive very well, and that's just going to say it nicely. I've met the founder and worked with them, like difficult person. And we're on the same team. We're all rooting for the same exit, but that's something, again, it's a relationship for years that you are in it until there is an exit. So you just need to be really thoughtful about where you're taking capital from. If you have the, hopefully you have the luxury of choice.
Just as an angel investor, I made one mistake in investing in the founder and really not doing enough due diligence on like the problems that he was trying to solve, the scalability, lots of questions. Because a lot of investors say it's the team is the team. Well, sometimes you can't only look at the team. So I put too many eggs in the founder basket on that example. On the other end of the spectrum, I invested in something I didn't know about, but I knew that he was solving a small business problem that needed to be solved. And so in that case, I went against my intuition, which is like, I can't relate to this problem, but there was a big enough market that entrepreneur was solving. And actually he ended up exiting in 4 years, which is pretty cool. So it was a company called Lettuce that sold to Intuit. So anyway, it was part of my angel investor experience. But we have 3 minutes left, and so maybe since there are no incoming questions, you all just want to do a quick round the horn of like what would be like your parting advice to the students who dialed in or will watch the recording. Any words of wisdom?
I'll kick off. At least from my standpoint, I get a lot of asks for help, and I love to connect entrepreneurs with other people. If I have a connection, I love to do it, but you have to do the work. Like if I ask you for an email, you need to write a beautiful email. Every interaction you have matters, and you really have to do the work to put yourself and your best work forward. But with that, I think the Duke Network has been incredibly helpful and incredibly responsive. So be bold and reach out, whether it be on LinkedIn. Duke has a lot of resources set up to connect you with other alumni, so take advantage of that.
I figured I'd give a resource. I agree with Amanda. I think my favorite podcast on the planet is How I Built This. And I've listened to every single episode. I'm constantly hitting refresh. Like, why isn't there a new one yet? The stories are really, I think, helpful for you to see like how hard it is, and how people got through the persistence, it required to get there and what kinds of challenges they faced. So you really get a sense of what it's like. But on a tactical level, I guess this is turning out to be backwards, so maybe not that helpful to show the cover. But if you're gonna raise venture money, you got to remember that venture capitalists do this all day. This is like their job, and you're gonna hopefully do it, if you're gonna do it at all, for like a couple times. And so you're never gonna be the expert in that situation. So get a really good startup lawyer, not a lawyer who's like your friend's brother, like someone who actually knows startup stuff. But also read this book called Venture Deals by Brad Feld and Jason Mendelsohn. It's actually, the subtitle is Be Smarter Than Your Lawyer and Venture Capitalist. I think they do a good job of balancing out what's good for the startup versus what's good for the venture capital fund. And you ought to really understand that if you're going to raise venture. And I literally am not saying everyone should.
I would add, just be confident in owning your story. I think whether you're bringing on a venture partner, an investor, they have their own story. Don't live into someone else's story. If you're starting a company, let it be something that you actually care about to some degree. Because you may more so care about the money that comes from the business, but you still care about it to some degree. But I would just encourage you to own your story and don't try to live into anyone else's.
I'll just kind of repeat what I said earlier, which is, I think the essence of business is like, well, and maybe what I'd recommend is just find a painful problem that you are really passionate about solving and figure out how to solve it really, really well. And maybe the rest is just details.
Amanda?
I agree with what everyone said. I'll add my favorite book, which is more about leadership, because I think, if you're fortunate enough to successfully start a business, it's all about leadership, is called The $1 Trillion Coach. I literally was underlining and highlighting a million things. It's this guy, Bill Campbell, I think is his name, and he advises all the CEOs and executives, not just CEOs, but executives in Silicon Valley, and it's amazing. So I like to learn from other amazing leaders, amazing entrepreneurs. But again, I think being an entrepreneur is, for a lot of people, it needs to be innate. It's not something, I think it's a lifestyle. And you have to just be able to go with the lifestyle. You have to understand that there are high highs and low lows, and be cool for the ride. You know, it's definitely a ride. And I think a lot of people are serial entrepreneurs. I'm a serial entrepreneur, so it's like, you know, it's kind of crazy to get back on. And I swear, I'm going to say this to you guys right now, I'm never starting another business again, but we'll see.
We're going to remember that. We're going to come back a year from now.
Right?
Well,
hopefully I'll be on the other side, you know.
Exactly. Well, we are past the hour. I just want to thank all of you for spending part of your Saturday with me and the Duke students. So I really, really appreciate it. I know the Hack Duke team does as well. Amazing advice and insights. So thank you, everyone.
Thanks,
very
everyone.
much.
Good luck.
Thank you so much for coming.
Yeah, good luck.
Have a good day, guys. Thank you.
Take care. Thanks. Bye-bye.